So as you know, I've been quite negative on the rate cycle for the RBA. I've been very negative on the Australian dollar coming here for the last 3-4 years. So much so that I was actually afraid I wasn't be allowed into the country, talking about how you're not the lucky ones, you're the complacent ones and the likes. But I sense coming into to Australia this week, there is a slight change to the more positive in terms of the tone of investors and policymakers I meet in Australia. And I think we are very close to the end of sort of the down cycle from commodity, which pretty much started in 2011. And I think that is probably also people are getting used to sort of the rebalancing of the Australian economy. You see the educational sector doing significantly in terms of export. And I think what stands in front of us, of course, is what everybody talks about, the potential hike from the Federal Reserve in December. I happen to think that the direction of the US dollar will be inversely correlated to the direction of the Federal Reserve policy. I mean, to prove it in backtesting, just think about the last 3 years. You had forever lower policy rates and an even stronger US dollar. So it's already sort of been proving itself. And in 4 out of the last 5 cycles we've seen where Fed has been hiking, it's actually been seeing a peak of the dollar to coincide with the first hike of the Federal Reserve. And why am I telling you this? I'm telling you this because I think that fundamentally changes the external factors that is so important for the Australian economy overall, i.e. the potential stabilization of the commodity prices, certainly in my opinion a potential strengthening Aussie dollar over the course of the cycle, and I think to a large extent also RBA, if they can avoid it, are done on the downside in terms of interest rate. They clearly see a bubble in the property market developing or potentially already being in place, so that I think they will be unchanged for a long time. And I think the next 50 basis point up or down from the RBA is most likely to be on the upside. There is potential for a 25 down, but for the next 50% net move, I think it will be on the upside from the RBA. So everything being equal, I think we stand in front of using the Federal Reserve as a catalyst for potentially going a little bit long the Australian dollar, but also as an Australian-based investor to hedge some of the exposure you have overseas.